Hi everyone, thank you so much for joining me. My name is Boipelo. If you're in grade 12 doing accounting, then this channel is for you. Kindly subscribe, like our videos, as well as just leaving any questions and comments down below. Today we'll be covering depreciation as well as fixed assets, and hopefully at the end of this video you'll have in-depth understanding of depreciation as well as fixed assets. So what is depreciation? It is an accounting method of allocating the cost of a tangible asset over its useful life or life expectancy. It represents how much of an asset's value has been used up. Basically, every year, the entity uses its asset to produce profit or income. Depreciation then is how much of that asset has been used up for that year to produce the income for that year. Hence, the depreciation is an expense and goes through the statement of profit or loss, or in your case, it might be income statement. The carrying value represents the difference between the original cost of the asset as well as the accumulated depreciation. So every year we depreciate our asset, and over the years, those cumulative depreciations are called accumulated depreciation. The cost of an asset is the purchase price of the asset. The carrying amount of the asset is cost of the asset minus accumulated depreciation. This is very important because throughout this topic, you'll hear more about carrying value of the asset, and you'll also be required to calculate the carrying value of the asset. What are some of the types of depreciation? We'll be focusing on the two types of depreciation being the straight line method and diminishing balance method. The straight line method is calculated over the useful life of an asset and is equally apportioned throughout the useful life of the asset. It is the most basic way of recording depreciation, and it's so easy. So basically, even your first year of depreciation, the depreciation of depreciating the asset, the depreciation is 1,000. It means that throughout the useful life of the asset, the depreciation will be 1,000 every year. And the depreciation is calculated on the cost price. It is very important to note this part because what makes it different to the diminishing balance method is that the depreciation with the diminishing balance method is calculated on the carrying value of the asset. So with the straight line method, the depreciation is the same throughout the years and it is calculated on the cost price. With the diminishing balance method, the depreciation is different every year and it gets smaller over the years, and it is calculated on the carrying value of the asset, which actually makes sense because if you think about it, if the carrying value of the asset is getting smaller and smaller, it means that our depreciation throughout the years will get smaller and smaller as well. So I've prepared examples. Company A acquired asset A for 1,000. The useful life of asset A is 5 years. What will be the depreciation for asset A from year 1 up until year 5? Because this is the straight line method, the depreciation will just be the cost price of the asset over the useful life of the asset being 5 years, and it will be 200. So in your first year, the depreciation will be 200, second year 200, up until year 5. What is then our accumulated depreciation of this asset? At year 1, it will be 200. At year 2, it will be 200 of year 1 plus the 200 of the year 2, then we get 400. The accumulated depreciation at year 3 will be 600 because it will be the 200 of year 1, 200 of year 2, 200 of year 3, then we get 600 Rand. What is the carrying amount of the asset at the end of year 1? The carrying amount of this asset at the end of year 1 is 800. Remember, the carrying amount is your cost minus your accumulated depreciation. So at the end of year 1, the accumulated depreciation is 200. The cost is 1,000, meaning our carrying value will be 800. At the end of year 2, the accumulated depreciation is 400, and the cost of this asset is still 1,000. It means that the carrying value will be 600. Up until year 5, the carrying amount at the end of year 5 will then be 0. So, and then the very same example, we're going to use it with the diminishing balance method. So company A acquired asset A for 1,000. The depreciation on this asset is 20% on a diminishing balance method. What is the depreciation on asset A at the end of year 1 up until year 5? At year 1, the depreciation will be 1,000 multiplied by 20%, and we get 200. At the end of year 1, our carrying value is equals to 800, which is 1,000 minus 200. And we get 800. We take that and 800, we take it to year 2 to calculate our depreciation. So our depreciation for year 2 will be 800 multiplied by 20%, and we get 160. Year 3, our depreciation will be 1,000 minus 360, which is our accumulated depreciation, multiplied by 20%, and we get 128. Year 4, still the same. You take your cost, you minus your accumulated depreciation of the asset, and you get your carrying value, and you multiply it by 20%, and you get your 102. So if you look at our solution, the accumulated depreciation at year 1 is 200. Accumulated depreciation at year 2 is 360. Accumulated depreciation at the end of year 3 is 488, and at the end of year 4 is 590. What is the carrying amount then at the end of year 1? It is 800. You take the 800, you take it to year 2 to calculate your depreciation. So you say 800 multiplied by 20%. And at the end of year 2, our carrying amount is 640. You take the 640 to year 3 to calculate your depreciation for year 3, which is 640 multiplied by 20%, and you get your you get whatever the amount, but the carrying amount at the end of year 3 is 512. So just take note of the carrying value and how you calculate your carrying value when you're dealing with diminishing balance method, because that is very important. So how then do we account for depreciation? Depreciation is an expense and it goes through the income statement. So we debit our depreciation and we credit our accumulated depreciation. So at the end of year 1, we'll say debit depreciation and then credit our accumulated depreciation. I've taken a question from the 2019 November exam paper just to show you guys an example of a fixed asset question. A delivery vehicle was sold on the 31st of October 2018, but no entry were made to record this transaction. The financial year end for this entity is 28 February. So the end of 2017, the carrying amount was 300,000. At the end of financial year of 2018, it was 2225. So we'd like to know from 28 February 2018 up until 31 October 2018, what is the depreciation and what will be the carrying amount of the asset on that date. The carrying amount, since we're using the diminishing balance method, the carrying amount will be 225, which is on 28 February 2018, that was our carrying value, multiplied by 25%, multiplied by 8/12. So this part I did not explain. If you're not depreciating your asset for the full year, you need to apportion for the months of the year. So from the 28th Feb up until 31 October, it is 8 months. So you will say 8/12. 225 multiplied by 25% multiplied by 8/12. So if it was half a year, would say 6/12. If it is a full year, then it's not necessary. But if it's part of the year, it is important to apportion the months. So we get our depreciation being 37,500, and then what is the carrying amount on that date? The carrying value is the cost minus the accumulated depreciation. The accumulated depreciation at that point is 100,000 plus 75,000 plus 37,500. So 400 minus all of that is equals to 187,500, or another way to calculate it would be to take the 225,000 minus this 37,500, and you get the carrying value on the 31st of October 2018 being 187,500. The next question was, what is the profit or loss on this asset? We sold this asset for 195,000. The carrying value of this asset is 187,500. So it means that we made a profit of 7.5. The takeaways from this topic is we have two types of depreciation methods, straight line method as well as diminishing balance method. If you're using straight line, it's straightforward. Your depreciation will be the same throughout the years, and the depreciation is calculated on the cost. If you're using diminishing balance method, the depreciation is calculated on the carrying value. And if you're not depreciating your asset for the full year, you need to apportion. And finally, the depreciation is an expense and it goes through the income statement, and always remember to debit it. So that is all from me this week. And again, if you have any questions, if you didn't understand something, if you need clarity on something, please leave your comment down below and your questions, and I promise to attend them as soon as possible. So I'll see you guys next time for the next topic. Bye-bye.